There's been something buzzing in my ear lately, and it's all about private credit. It used to be you could only access private credit through a bank, but the tides have turned, and like talk of the Roman Empire on social media, the reign of private credit funds is on the rise. So, how much would you like to know about this type of investing? We're going to talk about that right now on UBS Trending. Hi, everybody, and welcome to UBS Trending. Thank you for being here with us. I'm Anthony Pastore, and I'm here with Baxter Wasson from O'Connor Capital. Baxter, we're talking about private credit today, which some people out there might not really even understand the market itself or even the history of it. And just a couple numbers to bounce off here. 20 years ago, it was about $100 billion. And by 2024, it's poised to be somewhere around $2 trillion with 10% growth every year thereafter. That is an incredible projection and move from where it was just a few years ago. So it's not surprising, I guess, a lot of people are talking about it. So as we level set, just give us a synopsis. What does private credit mean for an investor?
Yeah, so in most simple terms, private credit are loans that are not traded. And those could be loans to companies, it could be loans to assets, it could be loans to individuals. And the key thing is they're not traded. And that's very different, for instance, than, say, a bond, right? Where the owner of that bond has it and they can trade it in a public market really at any time.
Right.
And the absence of that ability to trade it is part of what gives investors a premium with respect to pricing. So you get higher pricing on those loans, and often you get more lender-friendly terms. You really need to make the loan more attractive to the lender, because once they own it, they own it. There is no way to trade it. So you've got it, and you're going to keep it. And that's really one of the things that distinguishes the private credit market from other parts of the credit market overall.
Yeah, that's an interesting, a good way to start. But I guess the thing that I'm thinking about now is what is the buzz lately? I mean, I work in the financial services industry and had never really talked about private credit until the last few months.
Yeah.
What's going on here? Why are people talking about all of a sudden?
Yeah, so Fred, there's a lot of buzz around private credit. I think all of it really centers around the fact of the growth in that market and what you noted.
Right.
And that is a sea change, right? If you look back, even as you said, just 20 years, and then frankly for the hundreds of years before that, this type of lending, that when you make the loan and just hold it, that was dominated by banks. But because of changes in regulation and strain in the market, most obviously during the global financial crisis, which was kind of this big bang moment for the private credit space, and even now with the strain in the regional banks, a lot of that lending activity has been pushed out of banks, but the demand is still there. So it had to be recreated somewhere, and that's what you're seeing in the growth of the private credit market. It's been fast, and it's been very dynamic. There's a lot of different types of private credit, and they're all growing, and they've all got great tailwinds. It's really exciting, by the way, for an investor, because this is a really attractive asset class. As I mentioned, you get high returns and you get nice lender protection. So that's good returns over time, lower volatility. It's very interesting to be there, and you can access that in a lot of different ways.
Yeah, it sounds very very enticing, obviously, for an investor. But here's the question. I mean, I threw out a $2 trillion number. I mean, trillion is a big number. I mean, we can't even fathom how many zeros that is.
Yeah.
So it sounds like it could be an oversaturated market at this point. Is that the case?
So the short answer is no. The market is not oversaturated. The more nuanced answer is that in different segments of the private credit market, there are different degrees of saturation. But I want to note, again, even in the middle market direct lending space, which has been far and away the area that has attracted the most amount of capital, there is over $1 trillion of capital just in that one strategy.
Amazing.
In the private credit market. Even there are still these secular tailwinds of bank lending declining, and importantly for that segment of the market, the rise of private equity. So private equity continues to raise capital, continues to buy more and more companies. Those companies get bigger, they have bigger borrowing needs. So that's there. But that's only about half of the private credit market. The other half is, frankly, a lot of other subsegments, and the market saturation is very different there. There's, frankly, a lot fewer lenders and a really large number of borrowers. In part, a lot of them being non-sponsors, ultra high net worth individuals, those types of borrowers have a lot of borrowing needs across corporate and assets.
So lots of opportunity there to raise more assets within the space. Clearly, there's room.
Absolutely.
Okay.
Yeah, and look, that's even in a backdrop now. This is
Yeah.
especially true 5 years ago when rates were very low. Part of it was attracting investors was this is an area where you could earn very attractive returns. But even in an environment where base rates are high, this is still a very attractive asset class because the returns here are higher even than that. And again, you get those lender-friendly protections. And I think a lot of market participants on the investor side are recognizing that it's what's still driving the growth.
Yeah, we certainly know investors are out there looking for places to put their money to work, and obviously a lot of areas of the equity market are very expensive. Valuations are high. Bonds is a really interesting place to be because of where rates are. But this is just an additional opportunity. So speaking of that, where are the opportunities right now in the private credit space?
Yeah, I mean, in short, you almost can't go really wrong because of those big secular tailwinds. And I actually would encourage investors to look across the full spectrum and maybe even allocate this amount of your portfolio to private credit, but then subsegment within private credit because there are so many different things, right? So we've talked a little bit about middle market direct lending. Those are loans to companies that are owned by private equity firms. And those loans, by and large, continue to get bigger and bigger and bigger, right alongside the funds getting bigger and bigger, which is driving the whole market. That's the biggest segment of the private credit market. But there are a lot of other things going on. There's lower middle market direct lending. So those are smaller loans. Often those loans involve non-sponsors and, of course, smaller private equity sponsors as the owner. Different market, different dynamics, definitely less saturated with capital on the private credit side there. You have asset-backed lending. Those could be assets that could be financial assets, like consumer loans or royalties, or hard assets like commercial real estate or even art portfolios. You have private credit lenders doing those things as well. And so there's just a lot going on. Then you can get into the riskier segments of the spectrum, right? Mezzanine lending, where you're just above the equity, special situations where you might be the equity, a little bit of both.
Right.
Distressed, where you really are thinking, I could own this company, I'd be okay with that outcome. All of those are all within the private credit umbrella. They've all got great growth opportunities, and an investor could be very happy in any or all of them, really.
So what are the risks here? I mean, it sounds like it's a big group. You get plenty of lenders there to meet your sort of borrowing needs. What's the risk there for investors, if there is any?
Yeah, look,
everything comes with risk, right?
Everything comes with risk, and it's essential to pick the right manager and be with the right partner. And those different subsegments of the market come with different challenges, right? So I mentioned lower middle market lending, particularly with non-sponsors, or asset-backed lending, which also involves a lot of non-sponsors. Challenge there is just how do you find the right borrowers? It's pretty clear how to do middle market direct lending. You go develop relationships with the top 30 or 50 private equity firms and you're going to see deal flow.
That's right.
The challenge on the non-sponsor side is there are literally thousands of owners of those companies and assets that you might want to finance. So step one is how do you build a network that shows you enough deals? And then how do you build a team and an investment process that allows you to take that deal flow in, process it, structure the deals, execute them, manage the risk? It's real challenges, especially when you don't have a private equity sponsor, putting a nicely polished memo on your table and saying, and these are the terms that I would like. Are you in or are you out?
That's right. It's like a beautifully decorated cake given right to your front doorstep. That always looks nice instead of a box of mix.
Exactly. Or you've got to go out into the forest and find
your own ingredients.
Yeah, that's what non-sponsor lending is like.
Right.
But it's a very attractive segment of the market, and I do think that investors are increasingly becoming aware, again, of that different segmentation and what the challenges and benefits of getting out of that segment of the market where, again, good tailwinds, but there's a lot of capital there. So maybe look in other areas where there's a little less capital there.
Right. And obviously we say to our listeners, our viewers all the time, talk to your financial advisor. This is a very nuanced and specific area of investing. We've got about a minute left, and I thought maybe I'd just have you summarize for us, Baxter, the benefits of private credit in a portfolio. I mean, it sounds like you laid a lot of them out here on the table, but if you had to summarize it here in 30 seconds, what does that sound like?
Yeah, so as I mentioned, because of that illiquidity premium, you can get very nice pricing. So you're getting a nice return on your investment. It's also worth noting these are loans. So you're getting those returns in cash on a regular basis. So current income, high pricing, that's very nice. You also get strong fundamentals and actual covenant protection. One of the things that defines most loans in the private credit space is that you're getting covenant protection. That means that the borrower isn't doing what they're supposed to do. You essentially have that rule. A covenant is a rule and says, well, you got to do what you're supposed to do, or I can take control of that situation. So that's really nice. It insulates you from volatility. And of course, then in an environment where rates are moving around, most of these loans are floating rate. So that, high pricing, lower volatility because of covenant protection, and some protection from inflation because of floating rates and relatively short maturity loans, that's all pretty attractive in a portfolio, especially versus other asset classes that are out there when, again, there's these strong tailwinds driving all of it.
Yeah, and look, and we know that people are out there looking, as we said earlier, for opportunities, pockets of opportunity in the market. So clearly this is an area where, obviously if someone's interested in hearing this conversation, they should talk to their advisor, make sure it's right for them and how it fits into their portfolio, understand the minimums, understand the risks that are involved. But this is great stuff, Baxter. Thanks for walking us through. It's a complicated topic to whittle down to 10 minutes, so we appreciate you being so succinct with us.
Thank
and
you,
again,
Anthony.
don't forget to talk to your financial advisor if private credit or anything within that space sounds really interesting to you. But again, they will be the best person to let you know. By the way, don't forget to follow us on social media. Check us out at our Instagram channel at UBS Trending, plus all of the other social platforms. Until next time, I'm Anthony Pastore. Have a great day, everybody. And remember to keep your eyes on what's trending. We'll see you soon.